Thank you everyone for joining us. We appreciate you taking some time out of your afternoon to join us today. We have our full series up on our website, which I did send out in the chat box, the link, so you can register for. I think there's 7 or 8 upcoming. They go through the end of June, so please take a look at that when you have a chance. I also uploaded on the handouts tab of your GoToWebinar toolbar the presentation, as well as there's some forms that Larry's going to go through the forms first. So if you'd like to pull those up on your own computer as he's going through them, those are in the handouts tab for you. We're going to keep everyone on mute just because we do have a high volume of people today. If you'd like to, we're going to pause for questions and Larry will answer them. If you'd like to ask your question through the questions tab, I'm also happy to get your answer for you if you don't want to verbally ask your question. I think that's it. We'll turn it over to Larry.
Thank you very much. Of all the questions I'm been getting from my clients, this is over the last 3 or 4 weeks, this is the #1 area that everybody's asking about. And that's why we decided to divide up the presentation between insured and self-insured, because I understand it gets confusing when you combine the two. So we're going to have one presentation today on if you're insured, how to complete it, and then we're going to then have March 1st, we're going to have a second seminar on if you're self-insured. And the completion of forms are different depending on how your coverage is, whether it's insured or self-insured. The first thing I'm going to do is briefly go through the forms. And for those of you who have not looked at them, are not familiar with them, it gives you kind of an idea of what we're dealing with. Now, there's 2 forms we're going to go through today. We're going to go through the 1095C and the 1094C. And we're going to go through them in detail, and I've amended the presentation I did a few months ago to include common situations, things that you have to look out for. And now remember, since you're insured, your employees will get a 1095B from the insurance company. That will indicate to you, to them, that for those who took your coverage, when they had coverage, and that's for the individual mandate. Extremely important to understand. The purpose behind the 1095C is to show the IRS who you offered coverage to, when you offered it, who is covered by your plan, and also indicating whether your coverage was affordable. So remember, anyone who will have to do this, if they have 50 or more full-time or full-time equivalent employees in 2014, for 2015, that will determine your status as an applicable large employer, and you'll have to do the 1095C. What confuses everyone is that if you're between 50 to 99, the employer mandate does not apply to you for 2015, but you still have to provide the form to your employees. You have to provide the form to any employee that was full-time for a month in 2015. Now, what's very confusing, I just had a client ask me this. Suppose you had a situation where you had an employee in a measurement period, and they're a variable hour employee. You put them through a measurement period, and in any month they had 130 hours. Do they get a 1095C? And the answer is no, because that person is not deemed to be full-time until they get to their stability period. So when they're in the measurement period, they're not full-time, and if you use a 12-month measurement period and they've never completed 1,560 hours, they're not full-time. And therefore, even though in any particular month they worked 130 hours, the government does not see them as being a full-time employee, so therefore they're not eligible for coverage, and they don't get a 1095C unless at the end of the administrative period they were full-time. So they're in their stability period. They are considered to be full-time, and you had to offer them coverage. Extremely important to understand that. Now, let's look at the 1095C in detail. All right, you have to give a 1095-C to anyone who's your employee. So it doesn't include owners of an S corp or a partnership. They have to be common law employees to get a 1095-C. So if you're insured, don't worry about those individuals that are covered by your plan that are not employees. COBRA participants, they only get a 1095-C in the year that they terminate coverage, not in the year after, including also retirees don't get a 1095-C. So generally, it's employees. It's full-time employees, as I indicated before. So if you look at Part 1, look at employee, the individual employee will get a 1095-C. You have to put their name, social security number, street address, and then on the right side is you, the applicable large employer. Now, basically what you do is you have to, if you are a company that has a number of different EIN numbers, the entity that actually employs them, their EIN will go on the applicable large employer. So if you have a company with 3 different divisions, and 3 different divisions have employees, and they each have their own separate EIN number, you would issue a 1095-C for that applicable large employer who they work for, who has a separate EIN. Please remember that. So again, that applicable large employer, their name, their EIN number, street address will go there. That's fairly simple. Where it gets complicated is Part 2 of the 1095-C is the employee offer and coverage. In line 14, for what months you offer them coverage. And if you offer coverage to the entire family, then in most situations you would use a code 1E for those months that you offer the whole entire family coverage. If it's for all 12 months, then you would indicate that in the first column. If you have an employee that wasn't working for you, and in certain months they weren't working for you and there was no offer of coverage, another important code is going to be 1H, no offer of coverage. So if you have a lot of turnover, that's going to be an extremely important code, which I will go over in the next few minutes. For most employers, and what they have to, on line 15, put the dollar amount of what the employee will pay for the cheapest plan you offer them, and it's only for single coverage. So it's not the plan that they took, it's the cheapest plan that you offered them. And if it's the same dollar amount for each month, it goes in the first column. If not, then the various amounts will be indicated in the various amounts what the employee paid for a single coverage cheapest plan. That will go there. Now, in only several situations will that line 15 be not completed, and I will indicate when. Line 16 is the most complicated line. There are a number of situations that are reported there. For instance, whether that employee was employed by you, whether that employee, whether they took coverage. There's also a code if that person's in a waiting period or in a measurement period. I will point those codes out for you. There is a possibility during 2015 that one employee could have 2 or 3 codes in 1 year, especially if you have a lot of turnover. People come and go because that person could be not working for you in a waiting period and then took coverage. That will be reported in line 16, so that's going to be the most labor-intensive section of the form. There's also special reporting if you have union employees, and I will go over that in the next few minutes. There's a code for that. So I will explain in those situations. Now, there's also special codes for employees that waive coverage. And I will point those out. So you only use those safe harbor codes, to report whether your coverage was affordable or not. And those only apply if that person waived coverage. So I will point those out to you. Now, because you're insured, you don't have to complete Part 3. You leave that blank. The only time you would complete Part 3 is if you are self-insured. So since you are insured, then you don't worry about that section, because that section, Part 3, mirrors the information that the employee will get on a 1095C. 1095B, excuse me. So again, since it's coming from the insurance company, that's one portion you don't have to do. All right? Let's stop right here. And Stacey, do we have any questions?
Okay, I have one. How would you code associates that are on Medicare, parental insurance, and spouse's insurance?
Well, if they waive coverage, you use what we call the waiver codes, which I will point out in a few minutes.
Okay, and then I don't have any more, so let me unmute. Just be cautious, everyone, when we unmute, that you can put, if you're going to be talking or, taking another
We can
call.
hear everything you say.
Yes.
The conference has been unmuted.
Does anybody have any questions so far? Anyone?
Well, I have a question regarding, Section 15. When you say dollar amount for coverage, that's the lowest plan make available to the employees?
Correct. Not the one they took, but the one you offer them. So if you offer 3 plans, then you would, and they pick the most expensive plan, you report the cheapest plan.
Okay. Thank you.
Anybody has any other questions?
Yes, I have a question about the use of the 1I, which is on line 14, and when you would use that if you're using 1A for when they have
It's very limited. I don't know of any situation that would you would use that, but I will go through that when I go through line 14. So we'll examine that as we go through it.
Thank you.
Anybody has any other questions? Any general questions?
So the only person that gets this form is a person who would qualify for the benefit?
No, any full-time person.
And full-time definition is 130 hours in one
In any month. Now, as I indicated before, remember that most employers have 3 types of employees: full-time, part-time, and variable hour. So if somebody always works 30 hours a week, that's full-time. And as soon as they start working for you and work 130 hours, they would get a 1095C. Part-time people would not get a 1095C because they don't work 30 hours a week. What's confusing is variable hour employees. These are people that work sometimes full-time, sometimes part-time. And in that situation, you can put them in a look-back measurement period. Now, while they're in the look-back measurement period, the government says these individuals are not full-time. All right? Even though they may work in any month 130 hours, they're not full-time until we determine it at the end of their measurement period. All right?
Yes,
And technically, they are not full-time until their stability period. So let's say you had somebody that your measurement period ended in June, and you would use July and August as your administrative period, so they would be eligible September 1st. And you determine that that person worked 1,560 hours and they are full-time. So what you would do in that situation, that person only becomes full-time in September when you offer them coverage. And there's a code that you would use from January through September, through August, a 2D that indicates that person is in a measurement period. Now, if that person, again, that doesn't work 1,560 hours, that person is not deemed to be full-time, and they would not get a 1095C even though there was a month they worked 130 hours. All right? Any other questions?
If you
What you would do, a seasonal employee can be a variable hour employee if they work 6 months or less for you. So if that person is a seasonal employee, works less than 6 months, you have to put them through a measurement period. And if they don't complete enough hours during the measurement period, they're not full-time and would not get a form. Okay? Any other questions?
Yes, we have some people that are, we have a pretty good turnover.
Mm-hmm.
So if they only work here like 2 months and they do not, they obviously wouldn't even go through the measurement period completely. So there's no 1095 for them?
Well, it all depends if they're variable hour employee. If they're full-time, in other words, they always work 30 hours or more, and let's say they worked 2 months, and you had a 3-month waiting period, and they never became eligible for coverage, but they worked 30 hours, and you categorized them as full-time, yes, they would get a 1095C if you categorize them as being full-time.
If they were variable hours?
You would not get them.
Okay.
Okay? I know it's confusing, but these distinctions are extremely important.
Okay.
Any other questions?
Yeah, may I ask one more question?
Sure.
Could I ask you if our measurement period is between October and September,
Mm-hmm.
and our administrative period is October and November, even though we're reporting for year 2015, I'm only looking at the people in my measurement period.
Well, no. What you'd be doing in that situation is that since you have a stability period that starts December 1st,
Yes.
all right, you would only report and give a 1095C to somebody who you determine during that measurement period to be full-time, and you offer them coverage as of December 1st. So in that situation, and let's say that person was full-time, and you offer them coverage, and they took it. So basically in line 16, from January through November, you would put 2D, because they're in a measurement period, and then in December, you would put 2C because they took the coverage.
Or they wavered. Okay.
Or they waived. But they're not technically full-time until the beginning of the stability period. In your situation, that would be December 1st.
I got it. Thank you.
No problem. All right, let's go through the slides, and then we'll go through the 1094C. So let's go through the slides. So let's pull up the slides.
Let me mute real quick, Larry.
Okay.
The conference has been muted.
Slides, and then we'll stop to take questions at the end of the presentation for the 1095C, and then we'll go through the 1094C. So again, a applicable large employer, which is an ALE, 50 or more, full-time or full-time equivalents during 2014 must file a Form 1095C and one or more 1094Cs. And for 2015, as I indicated, that status is determined either during the calendar year 2014 or any consecutive 6-month period in 2014. Now, that special rule, that 6-month rule, only applies in 2014. In the future, the ALE status is determined during the previous calendar year. And as I indicated in the beginning of the presentation, you must provide and must file a Form 1095C for any employee who was full-time for any month in 2015. All right, you don't give a 1095C, for example, if you're an S corp, and to the owners, they don't get a 1095C. You don't give a 1095C for someone who didn't terminate during the year, but is on COBRA during the year. They terminated the last year. You don't give it to them. If a current employee terminated during the year is on COBRA, there's a special way which I'll be indicating which you report that. But for the following year, you don't do it. You don't give a 1095C for anyone who is a retiree. So, and again, an employer offers coverage that's insured. They only have to complete parts 1 and 2 of Form 1095C. And please advise your employees who will get a 1095B from the insurer. Now, again, the purpose of the 1095B is just to show coverage. Nothing more, nothing less. That's all it does. And for what months they were covered by the plan, and that's the purpose behind the 1095C. You may got insurance companies are distributing those as we speak, so you may want to let your employees know they'll be getting 2 forms. Now, please remember, these forms don't have to be attached to your 1040. Neither the 1095B or the 1095C don't have to be attached. The 1095C must be provided to employees by March 31st of 2016 for 2015. That's the new deadline. There's no other extensions. And the 1095C must be filed with the IRS on or before May 31st if you're doing it on paper, or June 30th if you're doing it electronically. So, employers must furnish a copy of the 1095C as applicable to a person identified as a responsible person in the form. That's the employee. Statements must be filed by mail unless the recipient, the employee, consents to receive it electronically, so you have to get their consent. And each member of the control group with a separate EIN must file their own forms on their own EIN. If an employee works for more than one ALE member during the year, they must receive a 1095C from each member, but only one member per month can actually report. So you have to divvy up the months and if they work for 2 different entities. Now, again, we've gone through this. Let's look at part 1. Lines 1 through 6 indicate the name, address, and social security number of the employee. And then you have to indicate the individual ALE member. And again, each individual member of the control group must file their own 1095Cs. And you have to indicate the telephone number of the person, the employee participant can call if they have any questions. Now, in line 14, what you're going to report is the offer of coverage. If the offer is made for the entire year, calendar year 2015, and you put the offer code in the first column. If not, then you put in the month that it applies. And there's a code identifying the type of health coverage actually offered by the employer. Now, 1A is an extremely important code, and that is the minimal essential coverage providing minimum value offered to full-time employees for individual coverage equal to or less than 9.5% of the federal poverty line. So if your employees pay less than $93 or $94 a month for coverage, you can use 1A, and 1A is extremely important because if you use 1A, as you'll see in the next few minutes, you don't have to complete line 15. So again, if your employees pay very little for their own coverage and you offer coverage to the spouse and dependents, you can use 1A. 1B is if you only offer coverage to the employee. 1C if you offer to the dependents, not the spouse. 1D if you offer coverage to the spouse, not the dependents. And 1E is the entire family. Most employers are going to use 1E. If you, now, the most common question I get in this area is that suppose you have a single individual and you only offer to him because he has no family. What code do you offer? What code do you use? And you still use 1E because if he was married, you would offer to the entire family, but he's not married. So it's what your general offer, if he has a family, you offer to the entire family. Then even though that person is single, you still use 1E. 1F if you have minimal essential coverage, not providing minimum value. Now, if you use 1F, that means the fact that you could be penalized. You could be penalized the $3,000 penalty, but you're not going to be penalized the $2,000 penalty. So you're offering a MET plan, but you're not offering something that's minimum value. So 1E is going to be extremely important. Now, one code that you will not use, and that's why it's highlighted, is 1G. 1G is only used if non-employees are covered by your plan and your coverage is self-insured. So you don't ever use, if you're insured, ever use 1G. 1H is an important code. In any month you don't offer coverage. And especially for those of you who have high turnover and you hire people during the year, for any month they're not working for you, there's no offer of coverage. So 1H is also going to be an extremely important code, because that's going to be used for, again, for those not working for you and those who terminated and as being offered COBRA. For months they took COBRA during the year after they terminated employment, you would use 1H. Now, somebody asked about 1I, qualifying offer transition relief. And in this situation, as this said, employee and spouse or dependents receive no offer of coverage, receive offer of coverage that is not a qualifying offer, or receive a qualifying offer for less than 12 months. This code is entered if other employees receive a qualifying offer, or if this employee received a qualifying offer for some months and not for others. I don't know in what situations, only if, I think, during the year, you changed the amount that they paid for coverage. In some months, it was a qualifying offer. For other months, it wasn't. I don't know that in that many situations where 1I would apply. And line 15 says if you use 1B, 1C, 1D, or 1E in either all 12 months or any of the monthly, then you would have to complete line 15. As you can see there, 1H is not there. I'm sorry, 1A is not there. So if you use 1A, you don't have to complete line 15. You enter the entire amount, including cents. If no amount is required, then 000 must be entered. If the amount is the same for all 12 months, the amount is entered in the first column. If the employer did not offer any coverage, or offered coverage was not minimal essential coverage, or did not provide minimum value, you don't complete line 15. So in some situations, line 15 is not completed. Now, as I indicated before, line 16 is the most complicated, because there's a myriad of codes that report a number of different situations. If the offer of coverage, if the offer is made for the entire year, then they place the code in the first column. But there could be some situations that one code would go in the first column. If you have a stable workforce and everybody takes the plan, then there's one code that I will show you that applies. Here are the different situations that are reported in line 16. Whether the employee was not employed or was not full-time, whether the employee was enrolled in minimal essential coverage offered, whether that employee was in a limited non-assessment period, which is a measurement or a measurement period or an awaiting period, whether the non-calendar year transition relief applies, and I'll mention that in the next few minutes, whether that employer met one of the safe harbor codes, and that only applies for those individuals that actually waive coverage. So those codes would only apply in that situation. Or the employer was eligible for multi-employer interim relief, and I'll mention that what that is in the next few minutes. So let's look at the codes, and let's look at the popular codes. First of all, 2A, circle that. That's going to be a popular code because in any month that person was not employed by you. So if you hired someone in September, from January through August, you would use 2A. They're not working for you. Or if they've left during the year, you use 2A. 2B is generally used if that person quit during the month and their coverage ended prior to the end of the month, you use 2B. Now, another popular code is 2C. 2C is entered anytime that person took coverage. It trumps any other code. So if an employee took coverage during the month, you always put 2C in any month they were actually covered by the plan. Another popular code is 2D. 2D is used if you're in a waiting period or in a measurement period. So in that prior example, that person asked me about somebody who became full-time because the stability period started in December. From January through November, for those employees in a measurement period, you would use 2D. Now, 2E. 2E is used. It says there, in which the multi-employer interim guidance applies. What does that mean in layman's language? If you have any employees, they're union employees covered by a union plan, and you check with the union, and that union plan is affordable minimum value coverage. For any month you contribute for that union employee, in line 14, you use 1H. In line 16, you put 2E. So for any union employee that works for you and you contribute to the union plan, 1H in line 14 and 2E in line 16. Now, 2F, 2G, and 2H. These are what's called the safe harbor codes, and you only would use them if somebody waived coverage. 2F is if you use the W-2 safe harbor. 2G if you use the federal poverty line safe harbor, and 2H if you use the rate of pay safe harbor. But again, please remember, you only use one of these codes for any month that employee actually waived coverage. Because what the government is surmising, if they waived your plan, there's a good possibility that they will go on the exchange. So they have to know whether that coverage is affordable. So you have to apply one of the safe harbor codes. Either, again, 2F is Form W-2, 2G is a federal poverty line, and 2H is the rate of pay. So you have to determine whether that coverage is affordable. If they waive coverage and the coverage was not affordable, then you would leave line 16 blank. Next, go to 2I. 2I is non-calendar year transition relief. What is that? That code applies if you were 100 or more employees and your renewal date is other than January. Let's say you had a October renewal date and you met all the requirements of the transitional relief, you covered enough people, you offered the coverage in the past to enough people, so the mandate in 2015 doesn't apply to your renewal date in October. Now, please remember that code is generally would only apply for those who waive coverage, because the instructions say 2C applies, it trumps everything else. Because you're telling, by using 2I, you're telling the government that until my renewal date, whatever that is in 2015, that employer mandate doesn't apply to me. And where you're concerned about that is if anyone who waived coverage, and so for those months prior to your renewal date, you would use 2I. Now, I've been using the term limited non-assessment period. Generally, that applies to anyone in a waiting period or in a measurement period. Generally, that applies. But these are all the different situations that are considered to be limited non-assessment period. And that what that means in layman's language is the employer mandate does not apply to you as an employer, to that particular employee. And you can read that later, but in most situations in my practice, what it applies to those situations that somebody is in a waiting period or in a measurement period. Now, many of you may have an HRA coverage. What the government said in the final regulations, if you have an insured plan and an HRA, and those in an HRA have to be covered, but they're integrated with the insured plan, what this slide is trying to say is that you don't have to separately report the HRA, even though it is self-insured. So, again, you don't have to report it. If you're with an insured plan and you have an HRA, there's no separate reporting. Now, I think just a second here. Now, common situations. Employee terminated during the year and offered COBRA. Month of termination, if coverage ended before the end of the month, in line 14 you would put 1H, and line 16 would be 2B, because again, to use one of the offer codes, it's got to be for the entire month. And then months after termination to the end of the year, you put 1H and 2A because that person is not working for you, and COBRA coverage is not considered to be employer coverage. Spouses work for the same employer. Coverage is the name of one employee and the other is treated as dependent. For the employee whose coverage is in the name of the spouse, Form WC will reflect offer of coverage and coverage 2C. For the employee covered as a dependent, the 1095C will reflect offer of coverage, but it will reflect a waiver of coverage, either 2F, 2G, or 2H. And then the 1095B will indicate that person is covered. Variable employee becomes full-time and is offered coverage. During the measurement and administrative periods, as I indicated before, individual is not full-time but is in a limited non-assessment period, so you use 2D. And if that variable hour employee is treated as full-time during the stability period and takes the coverage, then you use 2C. If they waive coverage, you use 2F, 2G, or 2H. But only in their stability period. Not until their stability period and you determine they're full-time, do they get a 1095C, and they are considered to be full-time. Reporting for partners and more than 2% shareholders, there's no reporting, they get a 1095B. Reporting for retirees and part-timers, no, they get a 1095B from the insurer. And reporting for COBRA participants the year after termination, there's no reporting. If you're insured, they would get a 1095B from the insurer. Let's stop right here and see if anyone has any questions.
Okay, I have a bunch, so let's do those first. First one, if you do not offer a health plan, I assume you just put a 1H for all full-time employees.
Correct.
Okay. And then employee has a 22-year-old dependent who is covered on their parents' policy, how do they prove their coverage when they file taxes?
They're listed on the 1095B.
Okay, so that's how the dependent proves. Okay. Our company has another division with its own EIN. Is it still considered an ALE if the number of this division's employees is less than 50?
Yes, because the determination of LE is determined on a control group basis.
Okay.
But the application of the penalty is determined on a member-by-member basis.
Okay.
So please remember that. So again, what that means in layman's language is that to determine whether you're a large employer, an applicable large employer, all the members of the control group are gathered together. And then that number is taking account all different members of the control group. Now, in filing the 1095C and the 1094C, the government says that the employer mandate applies separately to each member. So therefore, the 1095Cs and 1094Cs have to be filed separately to each member. Please understand that. And I'll go into that when I do the 1094C.
Okay, a few more questions. When would code 1G be used?
1G would never be used if you're insured. It would only be used if you're self-insured.
Okay.
And that code is used to give a 1095C to a non-common law employee, which includes owners, retirees, and COBRA participants. If you're insured, that's why I highlighted it, you don't use it.
Okay, and then it says, what is the difference between 1A and 1E?
1E is only used if, 1E is generally if you offer coverage to the entire family. But the employees pay more than 9.56% of the federal poverty line. So most employers, if an employee pays more than that, the more common code you're going to use is going to be 1E. If your employees pay very little or nothing for their own coverage, but you offer coverage to the rest of the family if you don't pay for it, then you can use 1A.
Okay, next question. We offer coverage to our part-time employees 20 hours a week. Do we provide them with the 1095C?
No. If you're insured, no, because it only goes to full-time, because they will get a 1095B from the insurance company.
Okay. Okay, next question. Let's see, I'm just trying to read this so it's written funny. What if they waive coverage because they are on Medicare or are on their parents' plan or are covered by a spouse?
Doesn't matter. You use one of the waiver codes.
Okay. And then if we have an employee that goes through their 90-day waiting period and enrolls in our coverage during the middle of a month, let's say January, do we use code 2C for the month of January even
No,
though they
it's got to
weren't
be
covered?
for the, well, let's look at two. If you go back and look at 2C, and then look at 2C. Enter 2C for any month in which the employee enrolled in health coverage for every day offered by the employer. It's every day of the month. So it's got to be for the entire month.
Okay. Okay. Next question. If on line 14 you entered 1A, must you put 0.00 in line 15 or just leave it blank?
Well, let's look and see what it says. Got to look at the. Bear with me a second. Here, line 15 says, if no amount is required, then enter 000.
They were asking about line 14, Larry.
Yeah, repeat the question. I'm sorry.
Okay, no, that's okay. If on line 14 you entered 1A, must you put a 0 in line 15 or just leave it blank?
No, it says here, if no amount is required, to put 000.
Okay. Okay. Does a company with 70 employees who do not offer health insurance in 2015 still have to provide both a 1095C and a 1094C?
Yes.
Okay.
It's 50 or more.
All right, and then this one says, just to clarify, if the employer only pays for the employee coverage, the employee can elect to enroll the family or pay for it. Do we still use the 1E for the offer of coverage?
Could you repeat the question again? I'm sorry.
Yes. If the employer only pays for the employee coverage, the employee can elect to enroll the family and pay for it. Does the employer still need to use code 1E for the offer of coverage?
Yes.
Okay. And then, God, we're getting there. I think I had a lot of them here.
No problem.
If employer offers coverage on day 1 of employment, will there be a different code in 2 for stability or measurement period, or would you just put 2C from the first day?
Well, it's going to be 1H because the offer has got to be for the entire month. So for the first month, it'd be if he gets the date of hire, it'd be 1H.
Okay. If I have a staffing agency, does the measurement period start from date of hire, or do you use a renewal date?
Could you repeat the question again? I'm done understanding it.
Yes, I know. And again, anyone who's asking these questions and wants further clarification, feel free to just chime in when we open it up for questions. All right, here it is. If I have a staffing agency, does the measurement period start from date of hire, or do you use your renewal date?
No. It's date of hire because if staffing company, they're not your employees, but it depends on the situation.
Okay. All right. And then how do you determine the waiver code?
You have to determine, and you as an employer have to pick which safe harbor you're going to use. It's up to you.
Okay. And then for self-insured and offer insurance to part-time employees, do we provide a 1095C?
For self-insured, yes, but you have to complete parts 1, 2, and 3 for any employee.
Okay. And then 2 more. Am I understanding this correctly? If we have divisions with separate EINs and we have an employee transferred from one to the other, would they get 2 1095Cs, one from each EIN division? Okay. So they would get 2. Okay. All right. Last 2 questions. If an employee changes divisions and we're offered coverage all year from the overall company, do we show 12 months of offered coverage under both EINs or 9 months under the first and 3 months under the other?
The latter.
The latter. So 9 under the, okay, so split them up. All right. And then last question, in box 16, what code would you use if you offered insurance the first day of full-time coverage? Would you use 2C or 2D?
You would use in that situation, I think in that month, you would either use 2D or 1H. I mean, 1H in line 14 and probably 2D in line 16.
Okay. Okay, that is all the questions I have, which thank you everyone, that was lengthy, and I hope they answered some of the questions everyone had. Let me unmute.
The conference has been unmuted.
Anybody have any questions?
Larry, I do have a question just to go back to what you just stated. So if you have an employee, your benefits are effective day 1. You don't have a waiting period or anything like that. And say they started today.
Mm-hmm.
When we go to do that code for the month of February, you're saying we would put 2D in box 16?
Mm-hmm. And then 1H in line 14.
And then you would put 2C in all the following months after that?
Correct.
Okay, thank you.
Anybody have any other questions? This is your golden opportunity. Come on.
On the 1A versus 1E, is the 1A only because it's not 9.5% or 9.56, whatever the case may be, of the
That's right. You're overly generous, and as I said, if you do the calculation, it's any employee that pays less than $93 or $94 a month would qualify for that. And you could use 1H because that qualifies, because the federal poverty line is $11,770. And so most employers don't use it, but some do. Some employers, they may give the insurance to the employee. They pay very little or nothing for it. If that's the situation, but they offer to the entire family, they don't pay for the spouse and dependents, that would qualify under a 1A.
Okay, so earlier I think that question got brought up. If the employer provides 100% of the employee's coverage, but everything else above and beyond, it's offered to the family, but it's at the employee's cost, then you would use 1A in that case.
Correct.
Okay.
Any other questions?
We have our effective dates for insurance is on the 31st day of employment, so our effective dates can be any day of the month, pretty much, just depending on when they start. So if they're not covered for the full month, which code am I supposed to use, or how do I differentiate between they had coverage, say the first?
Well, you would use in line 14 1H, and then line, and since you're in a waiting period, it'd be 2D.
Okay.
I have a question in regards to line 14. In order to use 1A, does it have to be 100% covered by the employer, or could it be any percentage that the employer pays in terms?
If it's less than 9.56 of the federal poverty line.
Okay.
And so if they pay less than $93 or $94 a month, if it's less than that, then it would qualify. It doesn't mean the employer has to pay the whole thing. It just means that the employee cannot pay more than that.
Okay. Okay. Thank you.
Any other questions?
Yes, what is the difference between minimum essential coverage and minimum value?
Minimum essential coverage is the Met plans or glorified wellness programs. Very little in coverage, but minimum value plans are a bronze plan, and they cover 60% of the expenses. So the obligation of the employer is to only offer minimum essential coverage to the family, but minimum value to the employee.
Can I ask a question?
Sure.
I thought that the 9.56% was of a W-2 earnings, that the employer...
No, well, as one of the safe harbors, it can be. There's 3 safe harbors under the law. There's W-2, a rate of pay, and federal poverty line. So you can choose one of the 3 as a safe harbor.
Okay, gotcha.
This is probably one of the most confusing areas of the law. Everybody's confused by that. I can understand it because sometimes it defies logic.
Exactly. Well, you would confuse me a little bit only with that federal poverty level because I know a lot of the employers are going by 9.56%, but doing a minimum of maybe $100.
Right.
Okay. Good. Thank you.
I have a question.
I have a question.
I need clarity on the difference between 1A and 1E.
Again, 1A, okay, the similarities between the two is the fact you offer coverage to the entire family. Okay? They're similar. The difference is, under 1A, the employee does not pay more than 9.56% of the federal poverty line for single coverage.
Okay, I got that.
All right. So if they pay less than $93 or $94 a month for their coverage, for single coverage, you can use 1A. If you're using either rate of pay or W-2 to determine affordability, you can't use 1A, so you use 1E.
Okay, but 1E brings in the family. So if the employer offers coverage to the family but does not pay for it, where the employer pays.
No, but see, the difference is in 1A, it's 9.5% for that employee's coverage. That's the difference. That's the difference. So you could use rate of pay or W-2 safe harbor and still, again, there's no affordability in there in 1E. So you offer, let's say you offer to the entire family, but you don't pay any of it. You can still use 1E. No problem. So you offer minimum value coverage to the entire family, but you tell the employee that they have to pay all the premium. You can still use 1E, but the problem is in line 16, it's not affordable. That's the difference.
Okay, so if you have an employee whose W-2 are $50,000, and the cost for his individual portion of insurance for that employee is $50 a month.
How much? I'm sorry, you broke up.
$50 a month. Okay,
That's
so,
less than the federal poverty line for his coverage, so you could use 1A.
okay, but to insure his family, the cost to add the family is $1,500 a month.
If you look at come here. Okay, just bear with me a second. If you look at
Basically, it doesn't matter what the cost of the family is, it's only based on what it costs the employee.
correct. That's the difference. I mean, that's and again, it's 9.56%. It's not, and now it's 9.56 of the single premium, and what that is, and basically what it is, it's $93 or $94 a month. Okay, let's go through the 1094C because we're running out of time. And the 1094C, and again, if you're a company with 3 different divisions and each one has a separate EIN, you're going to file 1095Cs for the employer of each individual member of the control group, and then you're going to file 3 separate 1094Cs for each separate member of the control group. Okay, and I'll show you how to do it. Okay, line 1 through 8 would be the name of the ALE member. So each division would indicate that what their name is. In line 9 through 16, you don't complete, doesn't apply. It only applies to governmental units. And then dropping down to line 18, you put the total number of 1095Cs submitted with this transmittal. So if as an individual member of the control group, you're filing 65 1095Cs, you put 65 there. Now, in most situations in line 19, you would answer yes, it's an authoritative transmittal because you have to complete the entire form. All right? And then in most situations, line 18 and line 20 are going to be the same figure. And then in line 21, is the ALE member a member of an aggregated ALE group? What does that mean in layman's language? Are you a member of a control group? And if you are, you check that box. And there's other sections of the form that you have to complete. I will point that out to you. Now, what's giving everybody conniptions is line 22. Line 22, there's various certifications. Qualifying offer method transition relief, section 4988 transition relief, and 98%. Qualifying offer. A qualifying offer is employees for 12 months don't pay more than 9.56% of the federal poverty line for coverage for 12 months. You would check box A. What that gives you is that you can, instead of giving the employee the 1095-C, you can give them an alternative statement. I don't know why anybody would want to do that, because you still have to file a 1095-C with the government. So why, and I'll point out when I go through the slides. Qualifying offer, transition relief, if the qualifying offer is not for 12 months, but it's for some months, you would, again, check box B. I don't know why anybody would want to do that, but again, if you have qualifying offer and you can do an alternative statement, which I will cover in a few minutes. The most important box to pick and to choose is box C. In order to get any transition relief under ACA, you have to check box C. Now, what does that mean? If you're 100 or more, for example, if you don't check the box, you don't get the transition relief for non-calendar year. You don't get the transition relief for 70%. You have to cover 70. Offer coverage is 70%. Or instead of minus 30, you do minus 80. If you don't check that box, you don't get any transition relief. If you're between 50 to 99, if you don't check that box. All right. Stacy, could you mute everybody?
Yes.
Stacy, could you mute everybody?
The conference
Yes.
has been muted.
Thank Check the box. The employer mandate comes in 2015, not 2016. So that box is extremely important to check. Box D, 98% method. If you offer coverage to 98% of your full-timers, spouses, and dependents, you can check that box, box D. And what it does in Part 3, if you look at Part 3, which is the next page, you don't have to complete column B. Okay? Now, again, in Part 3, first of all, you have minimal essential coverage. And the question in column A that we're asking is, did you offer coverage to 70% of your full-time employees? If you're 100 or more, if you did, you can answer yes. If you're between 50 to 99, you always answer yes because the mandate doesn't apply to you. In box B, full-time employees, you don't include those individuals in a waiting or measurement period. In column C is your total number of employees. You can pick the first day of the month, the last day of the month, the 12th day of the month, the beginning of the first payroll period, or the end of the first payroll period. So as long as you're consistent throughout the month, but it's all employees. In column D, you have to indicate whether you're a member of a control group. So if you indicated earlier you were, you have to check that box. And then in column E, you have to put a code in there. One code is for if you're between 50 and 99, and another code is for between over 100. I will indicate to you in the next few minutes what that code is. And then in Part 4, if you're a member of a control group, and you check, and you indicated you were, you have to list all other members of the control group in Part 4. All right? So let's go through this. And I'm running out of time, so okay, the 1095 4C, and again, the name and address and the employer identification number of the ALE member must be indicated. And again, if you have 3 divisions, each division has to file separately. Line 7 and 8, the contact person, that's again who the IRS will contact if they have any questions. Line 9 through 16, only if you're a designated governmental entity that you have to complete it. And line 18 is the total number of 1095-Cs to be filed must be indicated. And line 19, you should check the fact that it's authoritative transmittal, which means you complete the rest of the form. And there's one authoritative transmittal for each member of the control group. And in the control group area, each separate ALA member must file their own authoritative transmittal. Lines 20 to 22 completed. If you're authoritative, you complete that. Enter the total number of 1095-Cs that would be filed on behalf of the LE member. And for most employers, lines 18 and 20 will be the same. 21, you have to indicate whether you're a member of a control group. If you are, indicate that in line 21, and then you have to, again, indicate that in Part 3 and Part 4. And then in line 22, this explains every method. First of all, the qualifying offer method. This box is checked if the employer is eligible to use and is using the qualifying offer method for one or more full-time employees. Here, a qualifying offer is an offer to one or more full-time employees for all months during the year for which the employee was a full-time employee and did not pay more than 9.56% of the mainline poverty line. You can check box A. Now, if you check box A, this explains that there's an alternative method to do reporting. You can do it. You have to use 1A, again on line 14. And then what you can do, if you want to, there's an authoritative, there is a alternative method of reporting to the employees. Instead of giving them a 1095-C, you just give them a statement with the employer's name, address, and EIN number, contact name and telephone number, statement indicating for all 12 months of the calendar year the employee and his or her spouse and dependents received a qualifying offer, and a statement directing the employee to see publication 974. And then you have a qualifying offer transition relief. To be eligible for that, the qualifying offer method transition relief for 2015, the employer must certify that it made a qualifying offer one or more months to at least 95% of the full-time employees. That means 9.56% of the federal poverty line. If that's the case, there's an alternative method to filing, and here it indicates that you can, instead of giving the employees a 1095-C, you give them a statement indicating the employer's name, address, and EIN number, contact name and telephone number, and a statement indicating the employee and her spouse could be eligible for a tax credit for one or more months. I don't see that many employers doing this. What's important, as I indicated before, is box C. Any transition relief, either 50 to 99 or over 100, you have to check that box. And I explained to you all the various transition relief that applies if you check that box. In box D, you check that box if you offered 98% of your full-time individuals and their spouses and dependents coverage in 2015. If you do check that box, and as I indicated before, you don't have to complete the full-time employee count in Part 3, Column B. In Column A, because of transition relief, you can check yes if you offer coverage to at least 70% of your full-time employees and their dependents, or if you're between 50 to 99, you always answer yes. In box B is your full-timers. If you don't comply with the 98% method, you have to, again, for each month, put the employees. You don't include people in a measurement or in a waiting period. In box C is your total number. And then, as I indicated, to determine the total number of employees, use the first day of the month, the last day of the month, the 12th day of the month, or the first day of the first payroll period, or the last day of the first payroll period. In column D, for each month you indicate whether you're a member of control group. And in the column E, if you're between 50 to 99, you put code A. If you're 100 or more, you put code B. And then if you're a member of a control group, and as I indicated in part 4, you answer, if you answer as yes in line 21, you have to indicate all members of the control group. Now the question is, suppose I don't do this. What happens? This slide indicates that if you don't complete the form correctly, there's a $250 fine if you don't give it to the employee, another $250 fine if you do not file it with the Internal Revenue Service. The next question is, suppose I make mistakes. Are they going to penalize me? And what the IRS has said, penalties will be waived if you can show you made a good faith effort. So despite the fact you have mistakes on the form, you made a good faith effort, you completed it, they're not going to penalize you, but they haven't defined what a good faith effort is yet. Now this is all the information you have to collect for each employee for 2015. The employment date, months they were full-time or part-time, months in 2015 in which they were subject to a waiting or measurement period, months in 2015 where you offer them coverage, months in 2015 which the employee was covered by minimal essential coverage, months in 2015 which was coverage was offered to spouse and dependents, if the employee waived coverage, the affordability safe harbor, and for each month the amount of the employee contribution for the lowest cost option. For employer information, were you a member of a control group, names of each member, the total number of full-time employees for each month, total number of all employees. Does any transitional relief apply to most employers? Yes, that's the case. And then did you cover at least 70% of your employees? So Stacy, are there any additional questions?
I have a few here. If we are using the qualifying offer transition relief, what is the difference between 1H and 1I?
1H is the fact that you didn't offer coverage for that month. So that's what it means. And in 1I is that in some months you had a qualifying offer, and other months you didn't. So in some months you would use 1H, and some months you would use 1I.
Okay. Is the rate of pay safe harbor most common if the employer doesn't qualify for the qualifying offer method?
You have to decide which one will do a larger amount, because the problem with the rate of pay, it's very easy to use, but the problem is it only counts up to 130 hours a month. So it may be lower than the W-2 safe harbor. So it's whatever you pay somebody per hour times 130 hours. And employers say, well, wait a minute, my employees work a lot more than that. They work a lot of overtime. If that's the case, then the rate of pay safe harbor would not be for you. You would want to use the W-2 safe harbor.
Okay. Does the employer's safe harbor method have to be applicable to all employees under that employer's tax ID?
No, you can do it. You can use a different safe harbor for each employee group.
Okay. Do you need to produce a 1095-C for a full-time employee hired in the middle of December 2015? So the individual would not be an employee?
No,
okay.
If they don't work 130 hours for any month, you don't have to give it to them.
Okay, because it says the individual would not be an employee January through November and would be, okay. If you are using code 1A on Form 1095-C, do you have to check box A on line 22 of Form 1094-C?
No.
Okay, if you do not have to, should you?
No.
No, okay. Just to confirm, 1095B to employee from health insurance company. 1095C is given to employee by the employer.
Correct.
Both of these, the employee does not have to file with their taxes.
Correct.
Okay, because they're both done and filed with the employer taxes.
Right, and it's filed with the Internal Revenue Service, so that's one thing to tell your employees. You don't have to attach it to your 1040.
Okay. If you are completing the authoritative transmittal for a controlled group, is Part 3, Column C, the total number of employees for all controlled groups?
No, it's for each separate member of the control group.
Each separate member, okay. Question on the lowest cost health plan. Our lowest cost plan is a narrow network plan, Plan A, in a local area that is not available to employees living outside our area. What is the lowest cost plan for EEs outside our area?
It's whatever other plan. If they can't use it, you can't use it. I mean, if they can't use the plan, then it's not something that's offered to them.
Okay, and then it says Plan A. Okay, she's got it. Okay, we're good. That's all the questions I have. Let me unmute, and then we'll see if anyone has any further questions.
The conference has been unmuted.
I have a question about the total hours for the month.
Mm-hmm.
Do they round up or down, or does it have to be exactly 130 or over?
It's got to be 130 or over.
Okay, thank you.
Larry, can you explain exactly, because in our broker industry, exactly what transition relief is? Because carriers refer to transition relief, I think, is something different than you are. So exactly what is transition relief?
All right, for those employers, 100 or more, one is the ability, if you are eligible, to use your renewal date in 2015 to comply with the employer mandate. That's one. Two is in offering coverage in 2015, transition relief said you only had to offer coverage to 70% of your full-time employees, while the statute said 95%, which applies in 2016. That's another transition relief. Another transition relief is if you're subject to the mandate. The statute says that the mandate applies minus the first 30. In 2015, that figure was bumped up to 80.
Okay, so the transition relief technically then is going to be totally different. There may not even be any transition relief in 2016.
No, this only applies for 2015.
Okay.
I mean,
okay.
the employer mandate comes full bore in 2016 and 2015.
Okay, that's what I got. Okay, gotcha. Okay. Thank you.
Okay, one question I just came in. What is the description of a control group?
A control group is either parent, sub, or brother, sister. Basically, you have common ownership of at least 80%. So if your employer owns other companies and you have subsidiaries, one thing is important in determining whether you're an applicable large employer, an ALE. All members of the control group are then treated as one employer. But what confuses everyone is the fact that in the application of the employer mandate, each separate member is penalized separately. And that's why the 1094Cs have to be filed by each division.
Okay, that's all I have. Any other questions?
Anybody have any other questions?
One on an applicable large employer. If only, let's say, it's on a control group. If you have a company that has 5 different EINs, but they pay everybody out of one EIN, and benefits are offered just through that EIN, then you really don't have to list those other companies, do you?
If they're organized separately, you would have to, and that's in that situation, if each division has a separate EIN, then you would have to do them separately.
Even if there are no employees getting paid out of any of those other EINs?
Well, that's an interesting. I would think no, you wouldn't.
Okay, because in other words, everybody benefit eligible under one EIN, and the other is just for tax purposes.
Okay.
So, okay, thank you.
Larry, if somebody was on FMLA and their FMLA expired, and so they had to go on COBRA for a month before they could come back to work, so I'll have 11 months for this employee with the same codes, and then for that 1 month that person was on COBRA, I'll be using code 1H and 2H just for 1 month, correct?
Correct.
Okay. Can I ask about the S Corp? You said on the S Corp, none of the
The owners would not be considered to be common law employees.
Okay.
So they would not
That's
get
the
a
only
1095-C from you. They would get a 1095-B from the insurance company.
But if they're getting W-2 wages, wouldn't they still?
No, they're owners. They would not be considered. They're considered W-2 shareholders are not considered to be common law employees.
Doesn't matter about the percent.
2%, it's 2% or more.
Okay.
So even if they were actual employees, they're not considered common law employees.
They're not considered to be a common. If they're an owner, they're not considered a common law employee. C corp is different. Owners would be considered employees, but an S corp, more than 2% shareholders are not considered to be common law employees. Any other questions?
Can we call you later, Larry?
I was just thinking,
Can we have
can
your
we,
home
can we
number?
call?
Well, and again, what I'm offering, you could hire me separately, and it's something that a service I provide. What I'm doing for my clients, they give me different scenarios on the 1095-Cs, and I tell them whether it's correct or not.
Okay.
And that saves you a lot of time and money in doing that. But, I mean, I've been working on this for over a year, and I sympathize with you. It's extremely complicated, and that's because the instructions are not real clear. So just be very careful out there. And but, again, the first year they're going to be overly lenient. And, try to get them to employees by March 31st, but if you don't make it, just move forward and distribute when you can, because I don't think the IRS is going to be enforcing